Hey guys, Akil here. Welcome back to another vid, number 3, I believe. This time we're going to be on the NASDAQ on the 4-hour chart. And what we have is an advanced pattern formation coming into a level of structure. So first and foremost, let's take a look at our highs right here. You can see that price action ended last week, currently testing this level. And for you guys that are into Fibonacci-based patterns, harmonic patterns, advanced patterns as I call them, we have what's called a bat pattern in this same zone. It's going to look something like this. This first swing high to swing low is going to be our X to A leg. This move back up here is going to be our A to B. This failed extension to the downside is going to be our B to C. And this actual extension back up to retest the highs is going to be our C to D leg. Now, the bat pattern officially completes at the 886 Fibonacci retracement. So you can see we're already within that bat pattern zone as well. So two ways you can look to handle this. One, if you are an advanced pattern trader, this can be an at-market sell for you when the market opens because it's already in the zone. It is a valid pattern. The pattern doesn't become invalid unless we break and close, really break above the X leg, but break and close would be an even stronger signal. The second way to look at this would be treating it like a CTS trade. A CTS trade is, CTS means combined technical score. Pretty much it's a checklist of things that we look for in the market. They are each assigned a score value, and it's a way to kind of quantify your trading. That way you're looking at the same things each and every time you're evaluating a price chart, but you're also taking the same quality of trade. And obviously the higher score, the higher quality of trade, the lower score, the less quality of trade, or under a certain level, you shouldn't even take the trade in the first place. Regardless of that, if you are a CTS trader, then you're adding the points from the advanced pattern information. You're adding the points for the retested structure, whatever of the points you have in your checklist. And what you would be looking for is a reason for entry in this zone. So not necessarily trading this live at market, but waiting for price action to give you a reversal signal in this zone before you get short. Now, the one thing to remember about the short, and this is where people that are unfamiliar with these type of trades get into trouble, they assume when I say short, or if I use the word reversal, we're thinking like a full reversal, something that's going to go all the way down here. That is not what we're looking for in pattern trading. That is not what we're looking for in counter trend trading. We are looking for brief periods of relief. We are looking for price to come off an extended rally in one direction. We're looking for a slow and shift of momentum between the buyers and the sellers. And then we're looking for a short period of relief. If I can grab this thing, there we go, before the market ultimately makes up its mind on what it wants to do next, whether it's continue higher or reverse lower. But it's important to understand that we're only trying to get this move out of the market, right? Nothing more than that. Or if you're going for extended targets, there's a little bit more than that, but in no case, unless it's a trend continuation trade, are we looking for a full move down. So that's on the radar for today. I don't know if I'm getting tired. I don't know how many more of these videos I'm going to do for you guys. But as always, hit that like button. And if you have any questions or comments, leave them below.